guess the question is, with an intro like that, how do you guys do it?
Yeah, no, I think it's all about first identifying the best businesses who have sustainable competitiveness, managements who are deepening their moat, who are at the forefront of the category disruption, whatever industry they are in, and then be disciplined about valuation. So it takes a lot to go away from the herd. It takes a lot to break away from momentum. But I think last 12 months have shown it that disciplined investing pays, and you just add a little bit of a flavor of ESG over there, and the results are for you to see.
Okay, now in terms of what you have changed, sector exposure, single name exposure, I know you can't get into specific names here, but what changes are you generally looking to make in the next couple of weeks?
Okay, so I won't talk about next couple of weeks, but I'll just walk you through what we've done over the last 6 months. I think over the last 6 to 9 months, we were reducing our growth exposure, particularly some of the expensive Chinese technology names, because there was way too much optimism about it. Don't get me wrong; these are great companies. Look, one would die to have platforms like this in any other country in Asia, but the expectations were way too high, and one saw signs of evolving regulatory framework for this. Companies were investing in their sector, so which is where again it was kind of an obvious that valuations would correct. At the same time, they were named, these are the leading cyclical companies, whether it's the financials, whether it's the resources or the materials, which are very cheap. So it was all about disciplined investing, and which is where we went underweight China 4 to 5 months back and put that money in India, put that money in Korea and Vietnam. And again, we continue to like that position, and we believe that should do well for next 6 to 9 months.
Okay, Rahul, we want to get your views and get you to unpack that call on the underweight call on China. But let me just first bring to your attention, our viewers' attention, the redhead that's crossing the Bloomberg terminal right now. China vowing zero tolerance for commodities futures violations. The NDRC, the planning body, of course, that planning arm of the government, saying it's going to hold talks with major commodity companies here as well. This following on from those comments from Premier Li Keqiang last week, warning about price stability and rising prices within the commodity space. Rahul, to what extent are the price rises that we're seeing here and potential squeezes on margins part of the calculus for you when you call underweight on China?
Okay, so I think our reason for being underweight China is the market has done exceptionally well over the last 3 years. If you look at the consumer valuations, the bit on the excessive side. If you look at the valuations for the tech names, they were baking in a fair bit of an optimism, more so globally when we see the shift towards the cyclical sectors. If you look at MSCI China, 70% of the benchmark would be growth-oriented tech, biotech, etc. That coupled with the fact that a lot of these companies are investing or fighting for the same profit pool, whether it's e-commerce, group buying, etc., meant that there was kind of better money-making opportunities elsewhere, or meant that, the space would take a breather for a while there.
Okay, yeah, you talk about high conviction as well. Korea, India, Vietnam. What particularly stands out sector-wise for you?
Okay, so let's take one market at a time. If you look at Korea, we continue to like the semi space. We're still in mid-cycle, and I think the valuation that 1.5 times book still are attractive for the Korean semi name. Korean auto names are something we like. Most people have looked at last 5-6 years and excuse me, and are not too excited about the names. But if we dig a bit deeper, we look at the Korean auto names. These names are gaining market share. They've got a good model lineup. They are the top 3 players in the EV segment in Europe, etc. So that's something we like. Korean battery makers, again, the top 3 globally are something we like. We come to India, and India is a very controversial call. We've been bullish that market, despite what's happened around COVID. What we see in recent weeks is the peak of the COVID happening. The unique thing about India is it offers you a blend of global cyclical exposures, which is high quality, I would say software services name, high ESG metal names or material names. Plus, you have the domestic cyclical plays, which are the banks and industrials and consumer discretionary. So in the past, we've been overweight global cyclicals. We're taking some money off the table for India, particularly over there, and adding to domestic cyclicals. The economy is at really the trough. What we see is negative real interest rates, which should kind of lead to a strong pickup in the economy. That's something we like. And finally, we come to Vietnam. Vietnam is a 5% exposure for us. We've held the names, the 2 names which we held in Vietnam for close to 3 years. One is a leading retailer, available at 20-25% of the valuations of comparable name across the region. The other is a leading consumer bank, again, available at a fraction of valuation. So continue to like these names, and we believe along with earnings growth, what we get in Vietnam is a multiple re-rating also.
Yeah, I mean, not a lot of people know that. I'm glad you brought it up. I think that is the market that's really outperformed this year. So you're overweight by 5%. Those are two names you hold, of course, in Vietnam. How confident are you? Are you looking to add to that 5%? Are you looking at maybe adding another name? Talk to us about how you plan to bet around this story longer term, if you are looking to change, of course.
Okay. So again, these are the two names, like the way I said, we've owned for 3 years. We've seen them grown. We spend time with them, kind of a handhold them on appropriate role models. So one is a leading consumer retailer, P&J. The role model for them is the likes of Titan, Chow Tai Fook. The other is a Techcom bank. The role model for them would be a BCA, HDFC Bank, etc. These names have surprised us over the years by the quality of their execution. With every passing year, they've kind of deepened their moat. And look, again, Vietnam reminds us of India 5 years back, China 10 years back. So it's a very promising market. And I think that's an opportunity to make alpha before the crowd starts loving it.